Hi guys, good evening once again. Welcome back to our fourth lesson. All right, our fourth and last lesson, unfortunately. All right, but I'm hoping that we'll be able to continue with this come the new term in September. All right. Today we are going to just dive into the session or the lesson I have for you this evening. All right, which is the balance sheet equation. All right. Okay. Are you all hearing me? Just give me a thumbs up if you all are hearing me. Beautiful. All right. So as I said, we are going to go straight into the balance sheet equation this evening. Last week, we did the accounting equation. And the accounting equation is sometimes called the balance sheet equation. So you would be very familiar with the components that are used in the balance sheet equation. You will see the same thing in the accounting equation as well. All right. So let's go straight into it, and we are going to see what is more or less the balance sheet equation. All right. So the balance sheet equation states that the sum of assets should equal to the sum of liabilities plus the capital invested by the owner. It shows the relationship between assets, liabilities, and capital. Of course, you would have known that from the accounting equation we did the last day. Good afternoon, Shani. Okay, so it's basically what you would have seen from the accounting equation we did the last day, sorry, where I have indicated to you the equation is assets equals liabilities add owner's equity. So the balance sheet is a summary statement that shows the financial position of an entity, also known as an organization, on a specified date, and it's usually prepared on the last day of the accounting period. All right. So what does the balance sheet, what exactly does the balance sheet require? Or what would you ask yourself if it is you have to prepare a balance sheet? What would you be looking for? You are going to look to see what assets the entity owns. And of course, these assets would be your cash, all right, which is more known as your current asset. If you read the information I gave the last day, you would know that cash is a current asset. And then it states the products or goods you have available to sell at a profit, also known as your stock. And you would have to learn the new terms used in the principles of accounts now. Stock is the same as inventory. All right. You would also see the money your customers may owe the business that will be paid within 1 year. And we spoke about that being our current asset. All right. Of course, you'll have to be familiar with the new terms, debtors and trade receivables or accounts receivables. All of those mean the same. You're just talking about your debtors, people who owe the business. Of course, the balance sheet as well will show how the business paid for them. Now, not all the assets that you see in a business every asset you come across in a business does not necessarily mean that the owner purchased it from his own funds. He could have borrowed the money from the bank to purchase certain equipments or whatever that was needed for the business. There it is. He'd be able to show where he got his assets from. All right. The balance sheet also shows what the business owes to third parties. Of course, that ties into the second one, what the business shows, what the business owes, to third parties, such as your creditors, okay? And it also shows what is the amount left after deducting the liabilities. So that will tie into the equation I gave you as your part of your note the last day, where you're going to show assets minus liabilities gives you capital. All right. So there are a few things that you can extract from the balance sheet. All right. So it shows the company's resources. It shows its capital and the liability debts. And of course, this will help analysts, or well, when I say analysts, these are people who collect data about the business performance so that your business can be improved based on their feedback. All right. The balance sheet also helps you to see if future debts can be met by the business. And the balance sheet also gives you an indication as to whether the business is profitable, so that you can continue as an owner knowing that your business is doing well. All right, so let's continue. Okay, so we are going to look at the format of the balance sheet. So before you see the actual format, I'm going to tell you a little more about it. All right. So the balance sheet is classified under the subheadings: fixed assets, current liabilities, long-term liabilities. And what you also need to know is that the balance sheet can be prepared in both the horizontal and the vertical method. Today, we are going to focus mainly, or we are going to focus on the horizontal format, okay, where it lists all the assets on the left side of the balance sheet and the liabilities on the right side of the balance sheet. I have also indicated to you the vertical format. And of course, this is also very simple, but as I said, our focus is on the horizontal balance sheet. Okay, so we're going to move on. So this is your horizontal balance sheet. All right. I'm just trying to zoom it up so that you can see it clearer. Okay, guys. So I just wanted to zoom it up a little more. So this is how your balance sheet looks. All right. Of course, it's your debit side, which is the left-hand side of the balance sheet, there is where you record your total assets. On the right side of your balance sheet, which is your credit side, you record your total liabilities. All right. So just know there is no additional meaning as to why do we record assets on the left and liabilities on the right. This is just a format that is given. It states where all of your assets, your non-current assets, and your current assets are going to be listed on the left side of your balance sheet. And on the right side of your balance sheet, you are going to list your liabilities, your long-term liabilities, and your owner's equity. Okay. So that is how it should look here to you. Of course, that's how it looks. All right. So that is how your horizontal balance sheet would look. Let's move on. Just hold a second, guys. Okay, guys, so this is what I showed you last. I had some confusion taking place there. Anyhow, all right, so this is your vertical balance sheet. And I said it is just more or less to give you a little idea as to how it looks, where you're going to put your fixed assets, and everything goes vertically, not horizontally. It goes vertically. You put your fixed assets, your current assets, then your current liabilities, all right, your owner's equity, long-term liabilities. All right, so that is just a little idea as to how the vertical balance sheet looks. So let's move on. Good. So I hope you all would have, for those of you who have your phone, if you have your phone nearby, just take a little picture as to how the horizontal balance sheet should look. You are going to put all of your assets on the left side, that is your current assets, your non-current assets on the left side, and on the right side, you're going to put your current liabilities, your non-current liabilities, and your owner's equity. Of course, I've given you in bracket what are non-current liabilities. It's your long-term liabilities. And of course, I have indicated to you where your non-current assets are fixed assets. I have put that in brackets for you. So if you just take a picture of it, we can go straight into an exercise so that we will see why the balance sheet equation is sometimes called the accounting equation. Okay, so let's go straight into the question. All right, I have given you some information, a note wall at the bottom there as well. So we're going to look at a question. All right, we're just going to go straight into it. But before we go into the balance sheet equation, we are going to look at the accounting equation first. We are going to get all of our figures at the end of all of these transactions. We are going to come to a total figure. And once you've gotten that figure, we apply it in our balance sheet equation. Okay, so let's get started. All right. So we starting with, guys, if it is, you all can just simply put your headings the way I have it here. If you have your, of course, I hope you all will have a calculator nearby. Every time you're doing accounting, you must have your calculator. So you're going to just prepare a page for me, just get a blank page and head up just what you see here on the screen, cash, debtors, stock, furniture, van, loan, creditors, owners. So just put all of those to the top of your page, make sure they all fit. All right. I'm giving you time to do that. Okay, guys, so you all would have had up cash, debtors, stock, furniture, van, loan, creditors, and owner's equity, also known as capital. All right, so we're going to start by applying these transactions to the accounting equation. So of course, you don't have to write it, just go along with me and we are just going to apply the figures. All right. So the first one, A, purchased a new office table paying by cash. Now remember, each time you have to deal with a transaction, you need to be able to analyze that transaction and see if you can come up with the two components, which is either asset, liabilities, or capital. Just try and see if you can come up with two components because we need to apply two components to this accounting equation. All right. So the first one, purchase a new office table paying by cash. Now, if you purchase a new office table, that obviously will go under office, furniture, and cash. If you're able to recognize that they're speaking about the purchase of a new office table, which is office furniture, and they paid by cash, you came up with your two components, your two analysis there. Office table, which is furniture, and cash. All right. So if you purchase a new office table paying by cash, then obviously your cash is going to be reduced, okay, because you're paying by cash. So you're going to have minus $2,000 under cash. You put minus $2,000 under cash. And under your office furniture, you put a plus $2,000 because the business received a new office table. So that will add to the business furniture, okay? So under cash, you're going to have minus 2,000. Under office furniture, the column with office furniture, you're going to put plus $2,000. So that's the first one. The second one, B, sold goods on credit to RMA. If you sold goods on credit, identify the two areas or the two accounts there that are going to be affected. It would be your debtors account and your stock account. Your stock account is going to be reduced because you sold goods. So under your stock, you're going to have minus 700 because you sold goods. So if you sold goods, your goods is going to be reduced. So you put minus 700 under your stock account. And since you sold goods to RMA, RMA is the debtor. RMA is owing the business. So under debtor, since RMA is owing the business, he's a debtor. He's owing the business, you put plus $700 under debtor. All right. Good. So let's look at C. Bought goods on credit from J. Smith. If you bought goods on credit from J. Smith, it means that you are increasing your stock. So you're going to put under your stock column, you're going to put plus $1,800 because you are receiving goods from J. Smith, as well as since you purchase those goods on credit, it means that you are owing J. Smith, who is a creditor. So you're going to put plus $1,800 under creditor as well. Okay, so you're going to put under stock, plus $1,800 because you received stock, and you're also owing the creditor. You're going to put plus $1,800 under creditor. All right, we are going to D now. You paid creditors by cash. The two accounts we are looking at there is creditors and cash. If you paid cash $1,000, it means that your cash is going to be reduced. So under the cash column, you minus $1,000, which is very simple. And because you paid your creditor, their account is going to be reduced. So you're going to put a minus $1,000 as well under creditors. So under cash, you're going to put minus $1,000. Under creditors, you're going to put minus $1,000 as well. E is a bit, it's a bit confusing for those of you who are not familiar how to apply E, but we will break it down. All right. We are looking at a transaction where we purchase a van, we paid cash, and we still owing the creditor. Okay, I'm going to say that again. We purchased the van for $10,000. We paid $4,000 cash, and we are still owing the creditor $6,000. So as you can see, there are three areas in this accounting equation that is going to be affected. So first, we're going to indicate where we have purchased the van. The business received the van for $10,000. So that is a plus for the business. So you're going to put under van column, you're going to put a plus $10,000. Under the van, the column with van, you're going to put plus $10,000. So let's see what happened next. We paid cash $4,000. So cash is going to be reduced by $4,000. So you minus $4,000 under the cash column, put minus $4,000, but you still owing the creditor $6,000, monies that you have to pay. All right, so you're going to put a plus under your creditor because you're still owing the creditor $6,000. Okay, and that's how you're going to apply this transaction. You're going to put a minus under minus $4,000 under cash. You're going to put your $10,000, of course, to show that you received the van for $10,000. And you're going to show the $6,000 that you're still owing the creditor, which is under the creditors column. Okay, moving on to F. The owner brought, not bought, but brought in cash of $8,000 in additional capital. So more money was brought into the business. So once cash comes into the business, you go to the cash column, you have plus $8,000 because money came into the business, as well as if it is the owner brought in $8,000, his capital or his owner's equity is also going to be increased by $8,000. All right, so you're going to put under owner's equity $8,000 plus $8,000. Let's look at G. Sold office furniture, $500 cash. So the column with office furniture, because you sold office furniture is leaving the business. So under the column of office furniture, you minus $500 because furniture is leaving the business. And of course, you receive cash. So you put a plus $500 under cash because you receive cash. Okay. And that is G. H, the owner withdrew $1,300 cash for personal use. If it is the business took out, the owner, sorry, took out cash from the business, it's going to reduce your cash. So you're going to put minus $1,300 under cash. Okay. $1,300 under cash and put a minus in front because money was taken out from the business by the owner. And of course, that will also affect his capital or his owner's equity. You're going to put minus $1,300 because he reduced his capital by $1,300. So under owner's equity, you put a minus $1,300 as well. We have reached I. Receive a loan from First Citizen Bank. Of course, once you receive a loan from First Citizens Bank, you receive cash. Under the cash column, you put $12,000. All right. And because it is a loan, you are going to go to your loan column and put a plus $12,000 as well because you have to pay back that loan. All right, not a minus, but a plus 12,000. Because it hasn't been paid, you put a plus 12,000. And the last one, the owner took goods worth $500 for personal use. Let me tell you as well that the owner doesn't always have to take out cash from the business. The owner can also take out goods from the business, and all of that is considered drawings. Okay, so the owner took out $500 in goods. So your stock is going to be reduced by $500. Okay, under the stock column, it's going to be a minus $500. And of course, it's going to affect your owner's equity minus $500. Okay, so I'm not going to leave you to calculate, but for each column, I'm going to give you the figure because we want to go straight into the balance sheet. So for your cash column, you are supposed to get a plus $12,200. Under your cash column, put $12,200 plus $12,200. Under your debtors, plus $700. Under your stock column, plus $600. Under your office furniture, plus $1,500. Under your van, you put plus $10,000. Under your loan, you have plus $12,000. Under creditors, you have $6,800. And under owner's equity, $6,200. So I'll just call that out for you quickly again under cash, so that if these figures are written incorrectly, then your balance sheet is not going to balance. So I'm going to repeat it. Under your cash is $12,200, debtors $700, stock $600, office furniture $1,500, van, $10,000, loan, $12,000, creditors, $6,800, and owner's equity, also known as capital, $6,200. Now, I'll tell you why this accounting equation is, in fact, assets equal liabilities add owner's equity. If you add all of your figures, for instance, your 12,200 plus your 700 plus your 600 plus your 1,005 plus your 10,000, all of those items there are assets. So your cash, debtors, stock, office furniture, and van, they are all assets. If you add all those figures, you're going to come up with $25,000. That's your assets, $25,000. If you look at your liabilities consist of your loan, your creditors, and your owner's equity. Your loan is $12,000, your creditors is $6,800, your owner's equity $6,200. When you add those three figures, you are also going to come up with $25,000. So this equation is correct. Assets equals liabilities add owner's equity. All right. So that is it for the accounting equation, and we are going to now apply it to the balance sheet. Okay, equation. So let's move on. Oh, sorry. We are not doing exercise 2 now. Okay. So guys, I'm going back to the balance sheet here. I want you to look at it, all right? And we are going to take our figures. We are going to take our figures from our accounting equation, which is the figures I just called out for you. And we are going to now put it into our horizontal balance sheet. Okay, so we are going to start with our fixed assets. We're going to start with our fixed assets. I'm going to walk through this with you. All right, so make sure you have your balance sheet looking like this. I'm just going to give you 2 minutes just to draw up your balance sheet quickly. Leave space under leave space under your fixed assets, under your current assets, leave space under your long-term liabilities, your current liabilities, and your owner's equity. Make sure and leave about, I would say, about 3 lines under each of them. All right. So I'll just give you 2 minutes to just make sure you have your balance sheet drawn up. Okay, guys, so we are going to do it together, as I said. So we're looking at our fixed assets, and we know those are assets that the business has purchased for the business. All right, so the first fixed asset we have is office furniture. I'm putting it in there. Office furniture, and that is $1,500. All right, if you look under the accounting equation, you see that $1,500 that you see as the total. You are just taking your totals, nothing else other than your totals. So your office furniture is $1,500, and then the other fixed asset is van, $10,000. $10,000. Okay, of course, you're going to line it up properly. Okay, When you total those two assets, you are going to get $11,500 as your total assets, so your total fixed assets. Right, which is $11,500. Right? So you see where we have taken our totals from our office furniture. From the accounting equation, we took our 1,500, and we also took from the accounting equation total for van, $10,000, or total fixed asset, $11,500. Now we are going to our current assets. And if you read your note, you would know what are current assets. The first figure we're going to take is our stock. Stock. And if you look at your total for stock, it's $600. All right, moving on. Our other current asset is debtors, which is $700. Look at your total for debtors, $700. And look at your total under cash, $12,200. $12,200. Okay. When you have added, just a minute. When you have added all of your assets, that is your fixed assets and your current assets, the total of your fixed assets and your current assets would be $25,000 altogether. So that is the $11,500 plus all of your current assets. All right, when you add everything, total of fixed assets and current assets. I'm gonna just put in that there. Total of fixed assets and current assets, which would be $25,000. If you add everything, you're going to get $25,000. All right, so that is your 11,500 added to your current assets, which is your 600, your 700, your 12,200. When you add everything, you get $25,000. Going to the liability side of your balance sheet, we are going to look for first our current liabilities. Our current liabilities. Yes, now. So our current liabilities are people who we owe. All right, so your creditors is your current liability. Creditors, $6,800. If you look at your creditors column, you're going to see $6,800. Then you have your long-term liabilities. Okay, so guys, your current liabilities is supposed to go first. And after it's your long-term liabilities. So let me see how I can make that change here. All right. The point is to put the lesson, to give you this lesson. All right, so you're going to have your current liabilities. I'm just making that adjustment. your current liabilities, which is your creditors. I'm just doing it over here. Creditors, 6,800. Then you have your long-term liabilities. That's next. Long-term liabilities. And under your long-term liabilities, remember those liabilities that are beyond a year. So this loan is supposed to be paid back in 4 years. So it's a long-term liability. So loan will go under long-term liability. And your long-term liability, if you look in the column, you're going to see loan, $12,000. And the last part of your liability section is your owner's equity. Owner's equity. Right, so you have your owner's equity. And of course, you know that owner's equity is capital. Your capital, if you look under owner's equity column in your accounting equation, you see $6,200 is capital. $6,200. So when you add all of your liabilities, which is your current liabilities, your long-term liabilities, and your owner's equity, if you add everything, you're going to come to $25,000 as well. Okay. So just put your double, let me just put the double line under the 20. So you have more or less completed that balance sheet, which is really very simple. So your balance sheet has balanced. That is, there is $25,000 under assets, which is on the left side, and under your liabilities, there's $25,000 as well. Okay, so your assets there equals your liabilities, which is your current liabilities and your long-term liabilities, add your owner's equity. So you would see there where the balance sheet tells you the same thing that in the accounting equation has mentioned, that assets equals liabilities plus owner's equity. So that is it for your balance sheet. I'm sure that was very, very simple. Take a look at it again. All right, take a look at it again. You have indicated all of your assets on the left side of your balance sheet. You start with your fixed assets, and then you go to your current assets. You can put your total after you have incorporated those two sets of assets. You come up with a total fixed and current assets, $25,000. On the liabilities section, we have all of our liabilities, which is our current liabilities, our long-term liabilities, and owner's equity is also a liability because the business owes the owner. So that's a liability as well. When you add all of those liabilities, you're supposed to come up with $25,000 as well. Okay, so having done that, I'm sure that was very, very simple for you guys. So I'm going to just simply continue with another question here because I don't want to waste too much time. Right. Now, the last day, if you all looked at, if you all had looked at the notes that I gave you all 3 equations. I have given you the equation assets equals liabilities plus owner's equity. And I've also indicated to you that liabilities is equal to assets minus owner's equity. as well as I have given you owner's equity is equal to assets minus liabilities. Let me see if I can just put in these three equations here for you so that you can now complete that table that I have there. All right, so I'm going to try and put in this equation here for you so that you can complete it for me, because it takes you to the last question I have. All right, let me see if I can just put it in quickly. Assets equals liabilities, add owner's equity. Right? That is for assets. And then we have the other one, liabilities. Is equal to assets minus owner's equity. Assets minus owner's equity. And the third one we have is owner's equity is equal to assets minus liabilities. Owner's equity is equal to assets minus liabilities. Let me just, yeah. All right. Remember, your owner's equity is also known as capital. Okay. Your owner's equity is also known as capital. All right. So if you look at those three equations, if it is like, for instance, the first one, they ask you where the question mark is, they ask you there, what is capital? And we know that capital is equal to assets minus liabilities. So your first answer there would be $10,700. $10,700. So I want you, that's just an example of the first one. They ask you what is capital. The formula for capital is assets minus liabilities. So you 12,500 minus 1,800 is going to give you your capital, which is 10,700. I want you to do the others for me, and I'll call out the figures after. Make sure and look at the equation, okay? And that will help you to find your figures, okay? So 5 minutes, or 5 minutes, yes, just to do that. Okay, guys, so we're going to come up with our answer for B. We have to find capital, assets minus liabilities, which is 23,100. I'm just putting it where the question mark is. 23,100. If you got that, you're correct. Your answer for C, because you want to find liabilities, liabilities is equal to assets minus owner's equity. So your answer would be $4,300. $4,300. D, again, assets minus owner's equity, $3,150. Okay, $3,150. And E, you are to find assets assets, there would be liabilities plus owner's equity. Assets would be liabilities and owner's equity. Your answer there for E would be 25,500. Right? Same thing for F, liabilities and owner's equity, 51,400. All right, so those are your figures. Pay attention to your capital. I want you to know that capital or owner's equity is equal to assets minus liabilities. I'm going to say that again. Capital is equal to assets minus liabilities. Because your other question, I've just given you an idea as to how do you fit in your figure if you are given a table like this. But I'm going to take you now to the other question. Good. So this is your other question here. And of course, this question is for N. Philip. I didn't put that at the beginning, but the question here is asking you to use these figures that you have here to prepare a balance sheet. Of course, you are first supposed to calculate your capital. So the first thing I want you to do based on the balances that you are seeing there, you are to calculate for me what is your capital, which is assets minus liabilities. So again, I'm going to just leave you just about 2 minutes to calculate what is your capital there for me. We cannot move on unless everybody actually got the same figure for assets minus liabilities. And you all would just, if I can just get feedback from one person in the group telling me how much is capital, then of course I would let you know if you are correct, okay? So that shouldn't take very long. Look at all of your assets and minus it from your liabilities and tell me what is your capital there. 2 minutes. Okay, guys, back again. Rodney, yes, you are correct. You're correct, Rodney, very good. Okay, okay, guys, Rodney got $22,800 as his capital. And he's correct. How many of you all got that answer? Give me some feedback. You just give me a thumbs up if you got that. $22,800. Okay, so for those of you who didn't get it, let me just put for you how Rodney got his 22,800. So all of your assets there, and I'm going to just put it in here, assets, I'm just putting in the figures because it's going to take too long to write up all of these accounts. So it would be your 800 plus your 6,000 plus your 6,000 again. Or maybe what I should do, let me call it out. So it would be your cash in hand, 800, plus your stock, which is 6,000, plus your debtors, which is another 6,000, plus your motor vehicles, 10,000, plus your furniture and fittings, 3,000, plus office machinery, which is 5,000. When you add everything there, you're supposed to come up with $30,800 as your total. 30,800. Okay, moving on, your liabilities. Your liabilities, all right, is $5,000, which is your bank loan, plus your bank overdraft. You know your bank overdraft. I'm going to say it, and please listen to what I'm saying. Bank overdraft is a current liability because you're going to come across it in the question where you have to apply it. Bank overdraft is a current liability. So we're going to add in there bank overdraft, which is $1,000. And we also have creditors, which is $2,000. When you add everything there, you're going to come up with $8,000. And if your equation is assets minus liabilities, which is your 30,800 minus your liabilities, the 30,800 minus your liabilities, which is $8,000, you're going to get $22,800 as your capital. $22,800 is your capital. Okay, so Rodney, very good, I hope. All right, so great. I'm seeing where other people got it. So now we are going to do the balance sheet. We have to bear in mind our capital is 22,800. So go back to the balance sheet for me, and I'm going to, of course, you need to see the question. So look at your balance sheet. If you would have taken a picture, I'll just put back the slide. Take a picture of the balance sheet. Yeah, I'm right. Take a picture of this balance sheet, guys. Just take it quickly. Great. And now we're going to go to the question. All right. So we're going to get started. Of course, you're doing your balance sheet. It's a horizontal balance sheet. You must put the name of the business first, which is N. Phillip. And you put the balance sheet as at the 31st of March, 2020. So we put in the name of the business. It's important for you to always put the name of the business. N. Phillip. N. Phillip. And the other line, you're going to put your balance sheet. And we're going to put for the date as at the 31st of March, 2020. 31st of March, just a minute, March 2020. So as simple as that appears to be, it's important for you to always head up your balance sheet like that. In the examination, you always get a mark for headings like that. Okay, just simply telling you all that because a lot of students are so excited to do the question that they forget to head up information like that. So we're going to get started. We're starting with our assets, our fixed assets. Okay, so under our fixed assets, we're going to have motor vehicle. Motor vehicle, $10,000. And of course, you know your fixed assets are assets that the business would have purchased for their own use in the business. It is not for resale, okay? At least they will keep it for a few years and then they're going to dispose of it. But it's not to sell like goods. It is not goods to be sold, okay? The other fixed asset is furniture and fittings, $3,000. Let me just shorten up this. Furniture and fittings, $3,000. And then we have another fixed asset, which is office machinery, $5,000. Right, so when we total those three fixed assets, we're going to get $18,000. Total fixed assets, $18,000. Right. Moving on, we're going to look at our current assets now. And our current assets are cash, $800. Stock, which is $6,000. And debtors, another $6,000. Okay, when you total, your total assets would be your fixed assets plus your current assets, which is $30,800. Okay, so you're adding your fixed assets to your current assets, and you're going to get one total. I'm just going to put a line, yeah. For $12,800. All right, so that would have been your current assets. Now it's really not, you ought not to really show it like that, but that's okay. We can leave it like that. All right, we just put it like that for now. So it would be your 18,000 plus your $12,800 will give you a total fixed assets and current assets would be 30,800. Okay, so your other line would be total fixed and current assets. All right. So your total fixed and current assets would be $30,800. Okay. That's when you add your 18,000 to your 12,800, you get $30,800. Okay. Now going on, just a minute. Right. Moving on the right side of your balance sheet, which is your liabilities and owner's equity section. We're going to start with our current liabilities. Current liabilities. And of course, what will go under current liabilities? I told you, creditors. If you look at your note, you will see creditors as a current liability. So your creditors. And then you have your creditors, which is $2,000. And then you have bank overdraft. Yes, now. Then you have bank overdraft is your other current liability, which is $1,000. So your total current liabilities is $3,000. $3,000. Okay, moving on. Our next item there is long-term liabilities. Long-term liabilities. Of course, we have our loan, which is our long-term liability. A bank loan for $5,000. And the last one would be your owner's equity. Owner's equity. And you can put in brackets or just under owner's equity, you put capital. Put capital. And of course, we worked out our capital just now as $22,800. So capital, $22,800. When you total your 3,000, your 5,000, and your 22,800, you are going to come up to 30,800. $30,800. So as you can see, N. Phillip balance sheet. Guys, if you can take a picture of this, and you'll take a picture of the question as well. All right, so let me just take a picture first of this balance sheet. Right, take a picture of this balance sheet. Right, and you're going to take a picture as well. For those of you who just want to go over it quickly, take a picture as well of the question. Let me just go back to the question, and that's your question. So as you can see, the balance sheet there is the same as the accounting equation. Assets, which is your total assets, is equal to your liabilities and owner's equity. And that is the reason for they saying that the accounting equation is sometimes called the balance sheet equation. I hope that is clear, and I'm going to put you on to one of the other teachers. All right. So okay, guys, so that's our 4 sessions for this summer. All right, I hope you would have learned at least the basics to accounts, principles of accounts. I really hope that you definitely would have learned something. And please go to YouTube, try and access all the information that I have given and read it again. And of course, remember with accounting, it's all about applying what you have learned and probably understand, not probably, but you should understand what you are reading and practice, practice, practice. Now that we have come to the accounting equation and the balance sheet equation, that calls for more practice. The theory, you're going to look at all of the concepts and the principles that I have given you. So please read it. And I must say that it was really a pleasure giving you guys these set of information in accounting. And I'm going to pass you on to another teacher here. Okay. Bye, guys.